Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
Are you a new or experienced investor wanting to learn how to have a successful syndication business? Learn from the nation's leading syndication expert, my friend, Vinny Smile Chopra. He has created a multifamily academy where you will learn everything about deal analyzing to selecting emerging markets, managing assets, and much more. In the academy, you'll find over 500 lectures and templates to help you run a successful syndication business. Your membership also gives you access to Vinny every Wednesday through masterminding and coaching calls. Vinny came to the U.S. with only $7 and now is a CEO of 5 companies, acquiring and managing a portfolio of more than 3,500 units. He's completed 26 successful syndications ranging from 50 to 500 units and created a portfolio valued over $200 million in commercial real estate. He built the academy to teach and mentor investors like you to succeed. To learn more about the Multifamily Academy, text LEARN, L-E-A-R-N, to 474747 or call his team at 925-766-3518. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Sonny Shakhawala. Thanks for being on the show, Sonny.
Hey, Whitney. Thank you for having me.
Now, I'm honored to have you on the show. And Sonny is a serial entrepreneur currently focused on managing a 45-unit commercial asset as well as building out a private money lending business. He has grown his lending business from $100,000 loans originated in 2016 to over $2 million originated in 2018. He invests the bulk of his profits from both businesses into multifamily syndication with a select few trusted partners. Each deal sponsor specializes in a different market and asset class, which provides diversification in location, tenant base, and deal life cycle. I'm looking forward to getting into some of that and how you do this, Sonny. But tell the listeners a little more about you, and then let's dive into your expertise.
Sure. So serial entrepreneur, I graduated college and the first thing I did was open a food cart. That was pretty fun. It was serving chicken and rice, like Mediterranean style, on my college campus. I did that for a year before selling that off. From there, I joined the corporate world, did consulting for a little bit, for 2 years before saving enough money to open up my next restaurant, which was a massive failure. That was 3 years that I wish I could get back. But, the third year of my restaurant operations, I did my first real estate deal, which was a private money lending deal. And I had made more in that deal than I had made in the previous 2 years combined in my restaurant. So I was like, you know what, got to get rid of this restaurant as fast as possible and dive right into real estate. So I've been doing that now for a couple of years. And I think the complement to my real estate, my private money lending business is just finding good syndicators and backing them and supporting them and trying to get more returns that way. So that's where I am today.
Nice. So you're finding deal sponsors that you qualify and that you want to work with. And I want to say, we're going to go through that process a little bit and how you have chosen different people that you want to work with. I know a lot of the listeners are in those shoes or trying to get started, whether they are a passive investor looking for that first, deal or syndication that they're looking to invest in, or even if they're a deal sponsor or somebody pursuing to be a deal sponsor. This is going to be great information for them, from somebody from your experience and your side. So, let's start with that. Maybe some things that are important to you when you're looking to get started investing in a syndication, or maybe when you started, and then let's get into, how you interview the sponsor, and then we'll go to the deal and some different things. But initially, let's help that passive investor who's looking for their first syndication.
I think the absolute most important thing that a deal sponsor can show you is a track record, right? So I don't want to say never invest in someone's first deal because there's always exceptions to the rule. But you're really looking for someone who's been in the business for a while, right? Let's say at least 6 years at this point. Because there's new syndicators popping up every single day. There's just very little barrier to entry. So time in the game. So 6 years at least. They have at least $100 million under management. They have at least 1 million square feet under management, or 1,000 units, right? So it's one or the other. It's just to show that they can manage a large portfolio. Another thing that I like to look for is that they've taken at least 5 deals through the deal life cycle. What is the deal life cycle? That's acquisition, that's value add, and that's either a capital event like a refinance or a supplemental loan, or a disposition. I prefer disposition, right, because they're selling off the asset and then it's complete. But if there's a refinance or a supplemental put in, the investors are getting their money back, and from there or at least some of their money back, and from there it's usually much higher returns and much less risk. So that's the number one thing that I'm looking for when I'm interviewing deal sponsors, is that track record.
Nice. So, I know there are aspiring syndicators that are listening thinking, oh, it's going to take me forever to get there, or, how do I get started, or, you mentioned that, don't necessarily never invest in someone's first deal, or, maybe there's other things to look at. So, could you speak to that for just a minute? How would somebody, because if this was always the case, then, how does someone get started, or, I guess, get somebody like yourself to want to invest in their first deal?
Yeah, this is that common problem. Even when people are looking for jobs, right? It's like, oh, we're looking for someone with more experience, and it's like, how do I get experience if no one's willing to take a chance on me? That's a really good question. So I have actually invested in someone's first syndication. They were a student of someone that I usually invest in, so I knew that they had the education required, and at the same time, their deal structure was more favorable towards the investors. So a lot of times you'll see like a 70-30 split. This first-time syndicator, his deal structure was 80-20 to the investors, which was obviously favorable. A lot of the times you'll see like a 6 to 8% preferred return. This first-time syndicator provided a little bit more than that. So I guess when it's your first deal, you have to give up a little bit more, right? I'm now investing in people that are doing 35-65, right? Because they have that track record, because they know they're good, and because they know investors are still going to come to them, right? So as you grow your business and as you have more time in the game, you can start recapturing that value. But if it's your first time, I think you're just going to have to, there's probably multiple ways to do it, but I think giving more value to the investor is one way.
Nice. No, that's great advice. Great advice. I think most of us have been in those shoes, and we're, where we've tried to give a lot more to the investor to get started, at least
Right.
initially, and gain that track record, and to show more of alignment of interest as well, to some extent, but give a lot more back. So, you mentioned at least 1 million under management, 6 years in the business, 1,000 units, 1 million square feet. I think you had mentioned, and then, I guess, I'd like to go through how you interview a sponsor, what that looks like, maybe any other questions you like to ask, the actual sponsor themselves. Let's dig into, those things a little bit.
Yeah. So it's multiple touch points, right? It's not one phone call where I take up an hour or two of their time, because honestly, I'm looking for 2 to 3 hours of their time across probably a month time span, because I just have so many questions. And I think people are afraid to take up too much time of someone like a syndicator, right? So like a busy person like a syndicator, but at the same time, we are parting with our hard-earned money to invest in this person. So it takes time to build that relationship. So I would go into this interview process sort of like expecting maybe 3 to 4 half-hour calls over the span of 30 to 45 days, where I can kind of drill them on different things. And the first conversation would look like track record. The second conversation would look like, what's your team, right? I definitely do not want to be backing a one-man show. I want someone who has asset managers. I want someone who has like full-time underwriters, or not full-time as in he's paying them like a W-2, but full-time as in these people are underwriting 100 deals a month, and they are just passing forward what they like, right? And that's those 100 deals are boiling down to one deal that they're forwarding to that syndicator. Someone that has an assistant at the very least, right? Because time is the most important thing, and having an assistant is just, it's, you need that. A syndicator needs that type of person. Analysts, right? People that are doing market research, people, an acquisitions manager. Like these are just like the basic types of positions uh, uh, an established syndicator would have. So that second conversation would look like who's on your team. The third conversation I'd have would look like, what does your communication look like with your investors, right? Is it a monthly email? What are you sending on a quarterly basis? Are we going to see financials? Are you holding events? Like, do you come out to, do you make like a national tour, right? So one of my syndicators, he's based in Ohio, but he comes to New York once a year. He goes to California once a year, and he's going to Texas once a year, and those are where most of his investors are. And he's inviting everybody out, so we can get FaceTime with him and with our peers. So because what people may not understand is, or what you might not understand before you invest your money is, it's kind of like a marriage, right? You're going to be in this type of situation with this person for the next 5 to 7 years. So you want to be sure that you are getting the communication that you require. And if they're not providing it, then just move on to the next person. I actually invested in this indicator probably a year or two ago now. And I gave him my investment, and about 6 months passed, and I didn't even see an email. And I was like, this is just not for me. I don't like this. So I emailed him and I was like, hey, I'm not a fan of your communication style. I'm sure you're going to do great, but can I just get my investment back? And he was like, you know what? Sure, no problem. And he wired me my money back the next day. That
Wow.
was probably probably like surprising. I mean, that was a fund, so it wasn't like my money went towards one specific asset. It was a little surprising that he did that, and he didn't try to like keep me or anything. But at the same time, I just wasn't comfortable with his communication style, and I couldn't force him to communicate with me only, because that doesn't scale, right? And then the fourth conversation I'd probably have with any syndicator would be more deal specific. I'd ask for examples of past deals, right? What did the returns look like? If they're willing to share with me, what does a sample K1 look like the annual return for a specific investor, right? Obviously, blank out the name and the social security numbers and all that stuff, and provide that to me. And I'd ask for more proof that they were doing what they said they were doing, because it's very easy nowadays to go online and download a picture of some multifamily asset and put it in a nice spreadsheet and put it on your website and talk about it on your podcast and look like you're the man. It's very easy to do that. What's not easy to do is fake a closing sheet, right? Fake a warranty deed. Ask for those types of documents.
Well, that was going to be my next question. Like, what are some of those things that how you're going to get proof of that?
Yeah, prove to me that you are the owner of these properties. I need to see it. Because there are people out there that are, pulling the wool over our eyes. And that's, we can't part with our money on faith, on blind faith and trust, right? We have to trust but verify. It's the most important thing. And that's probably what I'm saving for last in terms of that interview process, because there's so many filters before that the person might not pass.
Right. No, I love that. I like how you laid out the team members as well, and it just shows that they are they're organized. They're going to have specialists. They're not, like you said, a one-man show. They're not trying to do everything. And even something as simple as having an assistant. I don't know where I would be without an assistant, honestly. Or numerous assistants. I've had many, that are VAs and numerous that are just working with me. But I like that, even how you just said, okay, if it's a one-man show, okay, it's going to be hard to see investing with them, just because you understand that this business is not a one-man show type of business. And So,
No.
let's move on a little bit. Okay. So, it's like a marriage, and you're going to trust, but you're going to verify, and it's going to be through numerous conversations, numerous, you said 30 to 40-minute calls about these different topics. And then, what about, so now we're going to get, to more deal specific, what types of things are you going to be asking about, about a specific deal, or maybe, evaluating that deal to make sure it meets your criteria, to invest in. Okay, so the sponsors pass these other tests that, you've asked, these questions and all these things. Okay, but now he sent you a deal, an offering. And now what's that process like?
So the first thing that I'm looking at is the debt service. I think to me, it's probably the most important thing, to make sure that the new debt that's put on the property could be satisfied with the trailing 12 NOI. So what I mean by that is the new debt that we are using to acquire the property, the old owner could have serviced that debt. Because what happens a lot of times is syndicators might over leverage, and they will compensate for that over leveraging in their pro forma by just jacking up those gross rents to a point where it'll satisfy the debt, or they'll reduce their expenses to a point where it'll satisfy the debt. So what I like to do, just as a litmus test, right, is just make sure I'll run, if it's an interest only loan, that's super easy to calculate. If it's amortizing, it's a little bit more difficult, but you can find a calculator online to help you do that. And I'll just make sure that the NOI for the trailing 12 of the previous owner could cover the new debt service at 1.25 at 125%. So if the new debt was 100,000, the trailing 12 NOI would be 125. So that's the first thing that I'm looking for. The second thing that I'm looking for is that their assumptions are conservative. So they have at least, so their loss, so like their economic loss, which is known as their vacancy, their loss to lease, and things like, and their bad debt is at least 10%, right? If they're not, if it's anything less than that, that's just too aggressive. It's not conservative enough. I'm looking for their expenses to be the same as the trailing 12, if not more, because a lot of times sponsors like to go into a deal and say, oh, we're going to cut this out, cut this out, cut this out, cut this out. And we're going to, going forward, we're not going to have those expenses. So we're going to save all the money here. I don't like that, because usually these operators have been owning the asset for quite a while, and they've done the work too, right? They've probably tried to cut their expenses as well, and they got it to a certain point. So for a new sponsor to come in, for a new investor to come in and think that they're going to all of a sudden just cut all of these expenses away is sort of egotistical, maybe even, right? So I like to think of it as, we're going to do what they did over the past 5 years at least, right? So like maybe a little bit of improvement if, let's say, we're buying an asset in a market where we own 10 other properties, and we know for a fact that our property manager is charging less than their property manager. So the expenses that they are cutting, I would really like to verify it by a third party. Or let's say we already own 10 properties in that market, and this is our 11th property. So our property insurance is definitely going to be lower than what they were paying, just because of economies of scale. So those are certain things that we can reduce, but only if it's through a third party source. Not, it's an assumption that we're making as investors that we can cut that expense, and we're going to just like, it's just going to float down to the bottom line.
When you say verify, you mean like in the insurance, for example, you're actually getting a quote from an insurance company, or maybe numerous quotes. But are there any other ways that you're looking to verify that by a third party?
No, yeah. Before you buy an asset, you're definitely going to get a quote on the insurance, and don't be afraid to ask questions of your syndicator. Ask the syndicator for the appraisal. Ask the syndicator for the environmental report. Ask the syndicator for the insurance quote of this asset. Ask the syndicator, what will the property taxes look like when we buy it, right? Because it might be $100,000 a year last year, but what's it going to be when we buy it and it's reassessed, right? What's the tax rate of that county? What's the tax rate of that state? What's it going to be when we take it over based on the purchase price that we're taking it over at? So ask those questions. Never think that you are being a nuisance. I had to get over that myself. Because sometimes I felt like when I was shooting them an email or I was giving them a call that, oh man, they're just gonna they're gonna hate me because I'm asking such a silly question. But more often than not, when they reply to me, they're like, great question. Um, you know, everyone else must be wondering the same thing. So they'll copy their other investors. So don't be afraid to ask those types of questions, and ask those types of questions, because those are the questions that you need to ask to be confident in your investment. And if you have yet to invest in a syndication deal, it's likely a confidence issue. You're either not confident in the sponsor, you're not confident in the market, or you're not confident in the asset itself. And the only way to get confident is to ask those questions and get that education.
I like that. And, if someone, and actually another guest on the show mentioned this the other day, as a quote, he said, I really liked, if an investor is confused, their answer majority of the time is going to be no, or they're going to delay, and so I like those questions though. I mean, personally, it makes me better. You're going to ask questions that somebody else has never asked, and it's going to help me to be better. It's going to allow me to know more information that maybe I need to include the next time, that I send out an offering, or that I'm communicating with someone like yourself, and knowing that you have all the information that you need. And so it's going to get, it's just this process of improving every time. And so, I invite the questions, because it's only going to make me better. And I'm not going to know every answer all the time. It's just,
Mm-hmm.
but it's going to help me to be better. Even if somebody like yourself doesn't invest, on that offering, we're going to improve because of these questions and conversations like you're talking about. And then, maybe you will the next time, or, but we're going to continue to improve. Go ahead.
Now, I was going to say, I think you guys are all I think most syndicators are doing a great job of answering questions and also making themselves available. I just think on the other side of the coin, a lot of passive investors are just afraid to ask. So I
Hmm.
think you guys are more than willing to share your knowledge and answer our questions and not make us feel bad for asking them. But at the same time, I think a lot of us are just sort of timid, right? A little bit shy to ask that silly question that we might have.
Do you have
Because
any suggestions on helping that, or helping us to be seen as more available, or that these questions are not silly, that they're good questions, or any way that we could come across better to someone like yourself, so you are comfortable asking those questions?
well, one thing would be maybe so so one thing that I've done in the recent past was I asked the question of a syndicator who sends out a monthly email for the performance of the property, and it wasn't as detailed as another syndicator that I have. So what I did was, hey, if you can include the following information, it would be great. And I actually just copied the email and sent it to this syndicator, and he's like, wow, this is totally doable, and I didn't think that you would be interested in knowing all of this, but I'm going to completely change my process, and just like from going forward, I'm going to provide this information to you, and all of the investors, right? So I think taking action on someone's question will validate their question, or will validate their ability to ask you a question. So I think that's what a syndicator can probably do is, obviously acknowledge the question, answer the question, and then maybe take a further step in maybe just changing their process and in moving forward.
Could you help us to know what to include in that email? What was it that you really like to see in that update? Because I feel like some deal sponsors feel like all that information, it maybe overwhelms some investors or some passive investors, or it raises a lot of questions about things they may not understand. They need to understand,
Yeah.
but so they're hesitant to maybe include some of those things. But what do you like to see in that email?
I like to see an update on the business plan, like the complete business plan. They do such a good job of telling us what the business plan is going to be when we are trying to acquire the asset. Like, how many units we have to renovate if it's not all of them, what we're doing inside of the units, what rent bump we're going for, what our target occupancy is, right? Those are all of these things that are in the business plan before acquiring the asset. We should be tracking those things in every email every single month after we acquire the asset, right? So occupancy, total gross income, expenses, our capital expenditure budget, right? Where are we in our capex? What has been done? What's left to do? And where's our money situation in our capex budget? How many units have been renovated? We want to. I want to see that there's progress happening. Um, What else? Any events that have been held for the tenants. I think I think that's important. And I think those are the basics. At the very least, they should be providing those items.
No, that's some great stuff right there. I appreciate you elaborating on that as well, because I'm always trying to improve that myself. Like what else do investors want to know, or what's going to help them to better understand what's happening,
Hmm.
in the business plan right now. So that's great. And so let's move to the market a little bit and how you select the market. Maybe you've got the syndicator picked out or the deal sponsor, but you're not real favorable of the market that they're investing in, or maybe you really like the market but not the deal sponsor, but the market specifically, what are you looking for?
Jobs. So David Lindahl wrote a book called Up. Uh, yeah, actually, I don't remember the title, but something like Up and Coming Real Estate Markets. And the one line pitch of that book is go where the jobs are, right? That's basically it. It's where are people moving? Where is their population growth? And where are the jobs? And then you also want to make sure that it's not just one or two companies that dominate that market. You want job diversity as well, just in case that one company pulls out of that market or goes under for whatever reason, you're not at the mercy of that company. So I don't usually like one company to have more than 15% of the jobs in the immediate market. Um, but yeah, it usually just comes down to those very, very simple things. And people, I think people complicate it a little bit too much, right? You're looking for where's the next multi-billion dollar Amazon distribution center going to be. Obviously that's a great thing, but you can't just bank on that one thing to carry your investment. You want you want predictable job growth. You want former job growth over the past couple of years. You want people moving to that city, or moving to that area. And you want job diversity. I think that's the basic gist of how I choose my markets. And I'm usually reading reports by brokerages like Marcus and Millichap, um, and Cushman and Wakefield, and I'm just seeing which markets keep coming up, right? What is everybody bullish on? Who's who's everybody mentioning, right? So that's like Jacksonville, Orlando, Tampa, Dallas, right? Raleigh. Like these are the markets that I'm consistently seeing in all of these reports, and the reason is clear. It's jobs and it's people moving there. That's it.
Are there certain size, population sizes that you're going to say no, that's too small?
One one criteria that I look for is cars that pass by daily. It's a really weird criteria, but 25,000 cars passing by the asset per day. That's something that you can try to find on LoopNet if you can get another asset that's near enough. That's usually a criteria. That's usually like a data point that they provide. 25,000 cars per day passing the asset.
Nice.
Yeah.
So, obviously we're going to run out of time pretty quickly here, unfortunately, but I wanted to get also to the offering memorandum. Anything else, as far as the paperwork or offering memorandum that you like to see, or how the information's presented and what you look for?
I definitely like to see a lot of pictures. Sometimes you're not able to visit the asset, especially if it's far away. I live in New Jersey, and the closest asset that I invest in is a 7 hour drive away. Right. So I haven't seen many of the assets that I've invested in. So pictures is obviously important. Video sometimes is important. But no, I think it comes down to what's the financial picture, what's the business plan, what's the debt service, right? Is it interest only? Is it amortized? Is it interest only for 3 years and then amortized? Um, the reason why they believe in this asset, um, what their assumptions are in terms of the pro forma, um, what the like structure is in terms of between investor and syndicator. That should all be in the offering memorandum.
Nice. Nice. So we're going to pivot just a little bit, a few more questions before we run out of time, Sonny. Tell me what's been the hardest part of this syndication journey for you?
Wow, good question. The hardest part. So now I'm at a point where I've found three to four syndicators in 3 to 4 different markets that all invest in 3 to 4 different asset classes. So I feel like I'm pretty well diversified. I think the hardest part is picking which deal I want to invest in, because my 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 investing ability is finite, right? I'm only able to do so much, and now that I have 3 to 4 solid guys that are bringing me solid deals, it's hard to pick. It's an opportunity problem, honestly. At this point, it's an opportunity problem. But if you asked me a couple years ago what was my hardest problem, it would definitely be finding the person that I feel confident in giving my money. Yeah.
That should be the hardest part, I think, on your side.
Yeah.
Opportunity problem. That's awesome, and it's awesome you found four different sponsors that are in 4 different asset classes in 4 different markets. Right? You're very
Yes,
diversified,
and they all have 4 different strategies too. One of them is like a apartment flipper. Like he gets in and out within 2 years. He's amazing. And one of them is more like 5 to 7 year hold with a refinance in year 3, like very structured. What I'm really looking for is someone who does the same thing over and over and over and over again. He has a system and he's just looking for an asset to run through that system, right? He's not all over the US. He's not, in multifamily this time and storage next time and mobile home parks next time. It's just someone who's in a market, they've planted a flag and they have a system, they have a property manager that they can rely on, and they're just funneling assets through their system. And it's just clockwork. That's what I'm really looking for.
That's great advice right there. So if you could pick one thing that stood out, either from the sponsors or some way that they have cared for you as a passive investor, what would that be? Like the top quality? I know we've mentioned many things, but just one big thing.
I need to get the feeling that they will do anything to make sure their investors don't lose their money. Literally anything. Die on their own sword, right? Just the guy that's going to go fight for me as an investor in his deal. I invest in someone. It's a quick story. I started investing with someone as a private money lender, and he turned into a syndicator. And I was so happy to be in his first deal that I did with him, because when I was doing private money lending with him, he actually did an upside down flip. So I guess we didn't predict what was going to happen in the market well enough, and he had to sell the house at a loss. He came to close with about $10,000 out of his pocket to pay me off on my interest. And he was smiling, right? He was like, look, sometimes it happens. You're my investor. I got to take care of you. And to me, like that type of attitude and that type of like honor, like he was just super honorable about it, right? That speaks volumes. So I'm happy to back that investor all the way, every single time. So I just need to feel like they'll do anything not to lose my money, because that's the preservation of capital. It's the most important thing.
Yes. Sonny, what's a way that you've recently improved your business that we could apply to ours?
I'm right now looking to get an assistant.
Good answer.
Yeah, we got to talk about that. We got to talk more about that, because I know you are like the expert now on that. So I'm interviewing assistants. I'm trying to free up some more time and try to get some automation back into my life. Yeah.
Great answer. Happy to help you and anybody else that's listening, hiring a VA. And so what about the one thing that's contributed to your success in this business?
Networking. 100%, just getting out there, making phone calls, not being afraid to talk to syndicators and other investors. It's so funny, because when I listen to all these podcasts, I listen to your show and Bigger Pockets and a few other shows, and when there's a guest who I feel like is speaking to me personally, right? Like there's so many episodes of so many shows, but when every once in a while there's a guest that is just like speaking directly to me, I make it a point to reach out to that person, whether it's through Instagram, whether it's through email, or whether it's through a phone call. I know that I'm going to talk to that person as soon as they say something that really resonates with me. And I think my ability to do that is what sets me apart. And it's difficult, even though I've done it plenty of times, right? And I did it with you. I liked what you had to say on your show, and I reached out to you, and now I'm here, right? So like, it's scary sometimes to reach out and put yourself out there, but I think it's super important, and I think that has contributed to my success a lot.
Great advice. I've had numerous do the same thing, and it's something. And even before I had a podcast or before I was doing larger apartments, I would try to reach out to be guests on the show. And numerous times, even years ago, it would receive help from these people, or they would just get on gladly pick up the phone and call, just because I made the effort to communicate with them or reach out. And so I like that a lot. And so before we have to go, Sonny, how do you like to give back?
Oh, so right now, my wife and I are focusing all of our charitable contributions and efforts towards a charity called inadcure.org. It's actually, INAD stands for Infantile Neuroaxonal Dystrophy, which is when children ages 6 months to 2 years old can they get diagnosed with this disease where they can't control their muscles, and it's a terminal illness. And the real problem with it is it's super rare, and because it's super rare, it's called an ultra rare disease, where I think there's less than 50 families affected by this in the world right now that we know of. So because of that, no big pharma company is going to invest the dollars necessary to do the research to try to solve this problem. So my cousins are, their daughter actually has this disease, and they've started a foundation. So all of our efforts are going towards that. That's inadcure.org. If anybody wants to check it out, that's kind of where we're focusing all of our energy right now.
Nice. Thank you for sharing that. We'll definitely have that in the show notes so that people can get more aware of that as well. So Sonny, what is the best way for people to get in touch with you, learn more about your business?
Sure. So if you want to follow me on Instagram, is probably where I post the most stuff, real estate and personally related. I'm at SUNSHAK, Sunshack, and I also blog. So my website is sunshack.com. And actually for this episode, Whitney, I prepared a little guide for passive investors. It's like how to interview a sponsor, how to get confident in a market, and how to analyze a deal. So if you want to get that, that's sunshack.com/Whitney.
Awesome. /Whitney, sunshack.com. We'll have that in the show notes as well. Thank you again so much, Sonny. You've been an amazing guest, and I know the listeners have learned a lot, and I look forward to going and getting that guide that you are talking about as well. Sunshack.com /Whitney. All right, Sonny, thank you again. And I appreciate all the listeners being with us today and every day. And I hope I will talk to you again tomorrow. And go to LifeBridge Capital and sign up and connect with me. Go to the Facebook group, The Real Estate Syndication Show, where we can all learn from experts like Sonny. And we will talk to you again tomorrow.
Thanks, Whitney.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.